Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 26th, 2025, and we are taking a close look at Microsoft, symbol Microsoft. We have a lot to cover, from conflicting news reports about AI spending and valuation to a deep dive into the technicals to see what the charts are telling us. So let's get right into the current events shaping investor sentiment around Microsoft. First, there's a growing sense of caution in the market. FX Leaders describes Microsoft as being at a turning point, where the initial euphoria over its AI dominance is being replaced by concerns over costs and sustainability. This sentiment shift follows a significant 7.5% pullback since late October, when the stock was trading near $550. Even though Microsoft beat Q3 earnings forecasts, the news was overshadowed by the sheer scale of its spending, with over $3.1 billion directed towards OpenAI initiatives alone. Management has also indicated that these high levels of investment will continue, which raises valid questions about future profit margins. Adding to investor jitters was an insider sale in early November by Vice Chair Brad Smith, who sold nearly $16 million worth of shares. While not always a bearish signal, such a large sale from a top executive can certainly contribute to a cautious narrative. However, the news isn't all bearish. Wedbush recently included Microsoft in its new tech list, calling it one of 10 must-own stocks, which signals strong conviction from some analysts. Furthermore, a projection from OpenAI that 220 million people will be paying for ChatGPT by 2030 underscores the immense long-term revenue potential that Microsoft is heavily invested in. On the valuation front, SimplyWall ST suggests a fair value of $500, implying the stock is currently undervalued from its recent price of $474. They note its price-to-earnings ratio is 33.6, which is reasonable compared to its peers and well below what some consider a fair ratio of 57.1 for a leader in the AI space. So we have a classic battleground scenario: long-term AI potential versus short-term spending and valuation concerns. Now, let's see how this narrative plays out on the daily chart. Looking at the full picture, we can clearly see the incredible run-up Microsoft had, culminating in an all-time high of $555.45 on July 31, 2025. That peak coincided with impressive fiscal fourth-quarter earnings and peak AI excitement. However, look at that candle on July 31st. It has a very long upper wick, which is a classic sign of a reversal, indicating that sellers stepped in aggressively at those new highs and pushed the price down significantly by the close. What followed was a sharp and sustained pullback, aligning perfectly with the news reports of profit-taking and a broader reassessment of AI valuations. The price decisively broke below the key psychological level of $500 in August and has struggled to reclaim it since. This established a clear short-to-medium-term downtrend from the summer highs. Now let's zoom in on the more recent price action since October. After a rally attempt in late October failed to breach resistance around the $550 area again, the selling pressure intensified through November. This brings us to the most critical area on this chart right now, the support zone between $465 and $470. As noted by FX Leaders, this level has historical importance, and we can see the price testing it heavily over the last few trading sessions. The lows on November 21st, 24th, and 25th were $468.27, $468.02, and $464.89 respectively. Buyers have been stepping in to defend this zone, but the repeated tests show that it is under significant pressure. For the bulls, holding this $465 to $470 level is absolutely non-negotiable. If they succeed, the first upside target would be a recovery toward the $485 region, followed by a much more significant retest of the $500 handle. On the flip side, any break below $465 on significant volume would be a very bearish signal, suggesting the downtrend is accelerating. Switching over to the 1-hour chart, we can see the recent battle for control more clearly. Here we can observe the sharp declines on November 20th and 21st, where the selling was relentless. However, during the last session on November 25th, we saw a very interesting development. The price gapped down at the open and made a new low at $464.89, but it did not stay there long. Buyers immediately stepped in, and the price rallied for the rest of the day, closing near the session's high. This price action forms a bullish reversal pattern on the hourly and even the daily chart, known as a hammer or bullish engulfing candle, which suggests a potential short-term bottom could be forming at this key support level. Drilling down even further to the 15-minute chart for November 25th, we can dissect that intraday reversal. The first few hours of the session saw the price bleed lower, culminating in that sharp drop to the low of $464.89 around 1441 Universal Time Coordinated. Look at the volume spike on that candle. It shows capitulation selling. But immediately following that, the buying pressure began to build steadily. We can see a consistent series of higher highs and higher lows for the remainder of the trading day, which is a textbook sign of buyers taking control in the short term. This strong close after a deep intraday dip reinforces the thesis that the $465 to $470 area is a major support level that institutions are defending for now. So, let's go back to the daily chart and summarize what we've learned and what to look for. The key takeaway is that Microsoft is at a critical juncture. The major support to watch is the $465 to $470 zone. This is the line in the sand for the bulls. Immediate resistance lies around $485, with the next major psychological and technical hurdle at the $500 level. Let's outline two potential scenarios. The bullish scenario, which I'd give a 60% probability to, is that the support at $465 holds. Given the strong intraday reversal and the powerful long-term fundamental story of AI and cloud growth, a bounce from here targeting $500 and above in the coming weeks seems plausible. This case would be strengthened if we see positive news that eases concerns about AI spending or a broader market rally. The bearish scenario, with a 40% probability, involves a failure of this support. If we see the price close decisively below $465 on the daily chart, it would signal that sellers have overwhelmed the buyers. This would open the door for a deeper correction, potentially down to the $430 to $440 area, which acted as support and resistance earlier in the year. Persistent negative sentiment around tech valuations or a broader market downturn would increase the likelihood of this scenario. So, what should you watch for? Look for follow-through buying above yesterday's high of $479.15 as an initial confirmation of bullish strength. Conversely, a daily close below $465 would be a clear signal to be cautious. To wrap up, Microsoft is a fascinating stock right now, with a compelling long-term story facing some significant short-term headwinds. Please remember, this video is for educational and informational purposes only and should not be considered financial advice. Always conduct your own thorough research and consult with a financial professional before making any investment decisions. If you found this analysis helpful, please hit the like button, subscribe to Explain the Charts, and let us know your thoughts on Microsoft in the comments below.